For asking, please stand up and state your name. Thanks. Rino.
Hi, it's Michele Della Vigna from Goldman. Claudio, you lay out a very clear plan on how to improve the cash generation in the company. I was wondering, in terms of cash return to shareholders in the form of dividend and buybacks, how do you see them evolving from here, especially at a time when cost of debt is so cheap? I think you've recently issued a 15-year bond yield at below 3%. How do you think about opportunities for potentially ramping up the buyback and the outlook for the dividend?
So what I can say that we are working really hard to recover from this European market that is very depressed. So our main focus now is really to be able to restructure our downstream business, our gas and power business. I think that we succeeded in these first steps to reestablish a good cash flow generation. And I think that we have in front of us, in terms of cash flow and also earnings, a good situation. But we have still to work a lot. But I think that is positive. So I think that there is no problem to confirm first our policy at the moment. So we don't have to say anything new about our policy, and also, as you know, also to confirm our dividend. For the future, as you know, we have to wait next strategy to talk about policy or to talk about a different kind of dividend. At the moment, I think that we are working hard. We are in a good position to confirm also for the future the policy and the level of dividend. It's clear that our dividend is linked to is going to grow as our policy with the earnings and with the strong cash flow. So that is in substance what we can say at the moment about the dividend. The first step is positive. Now we are in a situation, in a position, a very safe position from that point of view.
Thank you. Irene Himona, Societe Generale. I had two questions, please. Claudio, you spoke about disposals. I wonder if you can share with us how you think about Saipem. How does it fit in the plan? Are you looking to sell it, and what would be the time frame? And secondly, a question on Kashagan. You have told us that the pipelines need replacing. Could you give us an idea of the cost and the time frame for that? And in your targeted production growth, when do you assume Kashagan actually starts? Thank you.
No, first Saipem. For Saipem, we are studying different options. I already said that Saipem is a very good company. It's progressing very well. We like Saipem very much, but as an oil and gas company, I think that it's not core to have a stake in a contractor company. We are the only one, so we are thinking about different possibility with an advisor. So the process started. We are just at the very beginning of this process, so I cannot tell you about which kind of option or when we are going to do that, because we are not in a rush. I show you that we are in a good position from a cash point of view. So is more a strategic move than a need for cash. But it's clear that we're going to do that at the right time. We're going to keep the market informed. And it's clear that what we are going to do is really for Eni and for Saipem. So we want to maximize the value for both shareholders. And I think that we will be back on that. But that is a clear position. For Kashagan, Kashagan is what we are doing now, I think that all the tests and the analysis has been done, and we have a clear idea about what the reason of this problem. We don't have still the time in mind, because we wait for the operator that is working on the market investigation for the pipe supplier. We already start to some tender and also some purchase of piping. So I think we are in a fast track. We don't think that is in our budget. We didn't put any production in 2015 and some production in 2016. I think that as soon as the market investigation will be finalized in September, October, we will talk, or the operator talks to us and then to the market about timing and costs. But it is clear that our expectation to have sometimes production in 2016.
Thank you. It's Lydia Rainforth from Barclays here. 2 questions, if I could. The first one on OPEX and the cost cutting that you set out this afternoon. Can you just walk us through what sorts of areas you're expecting to save that money in, and just examples of what that looks like, and what, if there are any difficulties around that, or if you think that's a very achievable level in terms of, is it easy to do, or is there more to come later? And then secondly, just on you set us 2014-15 targets. Can you just talk about how you'd expect 16-17 cash flow to evolve relative to the previous plan as well? Thanks.
I say a few things about the cost efficiency program that is not really related to OPEX. Then Roberto can say something about OPEX, and Massimo can say something about the evolution of the cash flow. No, the efficiency program is coming from we restructured the company, so we don't have anymore a big corporate. We centralize all the services. So we have different areas where we already not only planned, but we have studied a very aggressive efficiency program, and I talk about a target of 1.7 billion euro in the 4-year plan, so 500 million each year. And that is something that we are doing we can say at the corporate level. For OPEX, you want to say something, Roberto, about OPEX?
Well, about OPEX, we are at the level of 8.7 dollar per barrel in second quarter, which is showing a slight increase, mainly due to ramp up and new projects that are bringing more fixed cost. Thank you.
Okay. And in terms of cash flow, as far as 2016 and 17, at the moment we don't have any significant reason to change the estimation we presented during our last 4-year presentation.
Thank you. Good afternoon. T-Pan Jothalingham from Nomura. I just wanted to come back to your revised sort of cash flow trend. Could you just walk us through the moving parts, particularly on the contribution from E&P near-field production and also working cap? What are the revised assumptions there? Thank you.
In terms of cash flow, as far as the production, I would say that nothing happened in the short time. The most significant info we can provide to you is that, as said, some of the brand new exploration successes could be brought into early production, contributing something in the range of 25,000 BOE per day in the very early time. So this could be something that could help us to sustain the free cash flow in the short term. And the second question was about
working capital.
The working capital. Definitely, working capital. We expect a significant contribution from, especially the gas and power. The mid-gas, thanks to the renegotiation of the contract we just had in the last months, that, has been recorded by Claudio, will give us the opportunity to recover the majority of the 1.9 billion euro we had in prepaid gas at the end of 2013 in the next 2 years.
If I can add something, because from a corporate point of view, I think that we have all the other components, so gas and power, or the reduction of capacity on R&M, so that is a contribution. For E&P, we have a production, we have new projects, we have an increase of 3% last year respect to this year, but we have also what I mentioned before, I call dual exploration. So we have some blocks, a lot of blocks where we are in excess of 80% working interest. So there is a clear plan, and we found interest around in the market to step into farming. So that is for us. Also, from a balance sheet point of view, it's a special item, but we consider really in bringing forward our cash and bringing forward our production in the exploration, reducing our stake. So that is another step to compensate, especially for the next couple of years, some lack of cash coming, of cash flow coming from, especially from Kashagan. With all these actions, considering also the other action, are going to create a cash flow that is in excess of what is not present because of Kashagan, especially.
Thank you. Sorry, Oswald Clint at Sanford Bernstein. First question, just on gas and power. I guess you were surprised by the deal you did with Gazprom this year. It's allowed you to revise your guidance.
You're surprised?
Yeah.
You are
against
surprised.
the Russians.
No, we're not surprised.
But so that's helped you revise that guidance, and you've 60% on hub at the moment, and you hope to get that 100% by 2016. So could you be surprised again, or what changed? Why are these renegotiations being easier, and could they become easier, and you could get to 100% hub exposure faster than 2016? And then secondly, just on the refining plans, you mentioned, Claudio, you've presented these plans to all the relevant stakeholders and hoping for cash break even by next year. So what's the necessary plans or steps we have to watch out for to see that being actually executed? Thank you.
Marco.
Okay. So on gas and power, thanks for the question, Oswald. Really, I think surprised is not the right word. I think when we gave the guidance, you remember we had an ongoing arbitration with Statoil, which was very significant, and we had the very concrete risk of an arbitration with Gazprom as well. And I think both have been solved commercially, which is always preferable, and both have been solved at a level which aligns them essentially to the hub. Now, there's going to be ongoing revisions to these contracts. You remember they all look back, and the hub has deteriorated since, and there's a lot of logistics implications. So it's not done, but I think having settled both in a positive way, plus the good performance of what we call the high-value segments that Claudio referred to, which are LNG trading and commercial, that together has enabled us to revise the guidance on EBIT. On the cash flow, the guidance is even greater because of what Claudio said and the take-or-pay reduction, which is really a factor of all these things together. Looking forward, the effort is going to be to bring all the contracts to hub level. So it's not hub indexation, it's hub level. The two outstanding ones, of course, being the North African, Algerian, and Libyan ones, which have to be done in the coming months. So that's really what's between us and the target of getting to 100%.
So, downstream, refinery and marketing, that now we are referring to what we are doing on refinery. I think that you follow the Italian newspaper. I don't know if you got the opportunity. Yeah, I followed. And very closely. I think that we for the first time, we really start a strong and determined action to change something. We don't want to run away or leave this decided, and we want to do something differently, and we don't want to lose money, and hopefully we would like to make money. So we start with JLab. We have a plan for all different refinery. There is a very important plan that is a transformational plan. We already done something in Venice, and that is doing positively. We want to do the same in Gela with the transformation. And what we are doing is linking the downstream restructuring with the upstream opportunity. We have a big, important or big or less big opportunities in Sicily or in other countries, and that help us to shift people after the right training. But in the downstream, we're already using a lot of people from the downstream in the plant. They are very knowledgeable and capable and very effective. So we are moving so we don't impact the labor, and we transform the or in green refinery or in depots, so in storage facility where we can import and we can export. And that is a part of the strong action. It's clear that abroad we have some refinery, small refinery. We are still 2 refinery. We have a plan to sell out these refineries. So we really want to reduce our exposure. That is not very big, but we are losing a lot of money. So we are really determined to go ahead. Today, just 1 hour ago, I think, after 2 days of discussion with the Minister of Development and with the unions, we signed an agreement, very important agreement in Rome, and that is I think that is a very important agreement because all the parties accepted to sit down and discuss our new plan. That will start with Sicily. Is a very positive for the region. Is a very positive for the workers, for the labor, and especially because we are going to invest in something that through which we can make money, and that is good because we have development also in the region. That is the first step. Was not very easy to reach it, and now we start negotiation of each single project, and then we are going to continue. When we talk about the break-even, it's a combination of break-even or refining, where we are reducing capacity, so reducing losses, and marketing, where we are optimizing also the marketing, also the retail oil. So that is the combination. But we are really very focused every day.
Peter Kemp from Energy Intelligence. I had a question about Mozambique. You just mentioned farming down your licenses to increase cash flow, and you still have 50% of Area 4. I was wondering what your eventual and optimum stake in that block, what it is you're targeting. In your strategy briefing earlier this year, you outlined various FLNG projects for Mozambique, but there was no clarity on your proposals for a land-sited LNG train. Just wondering what you're planning on the land sites at the moment, and what the FLNG picture is at this stage. And finally, on indexation, you had indexation with Anadarko on the early. Sorry, you had indexation with Anadarko on the Prosperidad y Mamba discoveries. I was wondering if there's further indexation to do further south on the block.
Okay, so I answer you about the first question about the M&A part. So our position is to be operator with a 30-35%. So we have the possibility to farm out between 15 and 20%. That was the plan for this year, but because we don't need cash at the moment, we always need cash. But I think that we try to optimize the value of our assets. We are close to take the FID. So the FID for Coral is expected in December this year, 2014. So we'll move again on the farm out after the FID. So now Roberto can give you some detail about the project and about the unitization and the rest.
Yes. Well, let's talk firstly about coral, the non-straddling reserves. We are running a competitive FEED exercise for the floating LNG with 3 major consortia. We have already submitted to the authorities the plan of development. In terms of contracts, this development will be under the petroleum agreement, so there will be no need for special regime. And as Claudio said, we are targeting December for FID. About the onshore part, the onshore part actually is for the straddling reservoir. I mean, the reserves we are sharing with Area 1. In Area 1, the name is Prosperidade. In Area 4, as you said, is Mamba. We agreed with Area 1 a draft unitization agreement. We have agreed the master depletion plan. We have also agreed with the authorities the draft of enabling legislation and decree law, because the straddling reserves will be developed under a special regime. And about the project itself, just yesterday we have issued the main tender for the EPC contract, so for the construction of 2 trains, 5 plus 5 million tons per year, with results expected in second quarter 2015. So for the straddling reservoir, we are targeting an FID basically in the second half of 2015. Right. We have also agreed with Anadarko the layout in the Afungi Bay to locate our 2 trains.
Good afternoon. Thomas Adolf from Credit Suisse. I've got 3 questions, please. Firstly, on your production guidance for next year, I was just wondering what sort of contingencies you have in place, or whether they're any different to your prior plan. The second question, I guess, is just sticking with Mozambique. Just wondering what progress you're making on the MOUs for the offtakes, if any, and related to your potential partial monetization. I guess it will have to be at the Eni East Africa level, since I guess CNPC has a stake in the subsidiary, rather a direct stake, and almost certainly CNPC doesn't want to be diluted. And the last question I have is on Iraq, and I guess I asked you on the first quarter call what your view is on Iraq, and you said I'll give you a decision a year from now. Has that changed? Thanks.
So production, we want to talk about production for next year, or should I talk?
Well, first of all, we confirm the guidance. Next year we will have significant projects coming on stream, accounting for 150,000 barrels a day. So we confirm, as I said, the guidance we already gave you. And about 2014, as you know, we have almost flat production between 2013 and 2014. So this is the scenario for production, with further contribution from new projects, from the pipeline of new projects.
The question was on contingency.
Libya and Nigeria. We are considering Libya and Nigeria basically at the same level we have this year. Consider that Nigeria is producing around 120,000, 130,000 barrels, clearly affected by bunkering and sabotage, but we are focusing on offshore. in particular in the deep water, where we are getting very good results from our Abu field. And about Libya, our present level of production is in the range of 2,030, 250,000 barrels a day, mainly on the western region, because our Abu Atifel field is still shut in, and we consider that this situation will stay also for next year. This is the assumption we have for next year.
Mozambique, technical
Mozambique,
answer.
Mozambique, we are working with Marco to talking to the buyers, in particular in the Far East. We have clearly a priority for coral because of an FID late 2014. Marco, maybe you can say more about the scouting on the market.
I think there's a lot of interest and excitement in the area for LNG in general, but for this project in particular. So we confirm the previous target of having binding agreements in place, at least for coral, by the end of the year.
As far as the disposition of additional stake in our Mamba project, I would say that the disposition of shares in East Africa would be the easier solution in front of us. But I would say that potentially there are other solutions in place. So I cannot say anything specific on this respect.
So the last point about Iraq, about our project in Iraq, we are not really happy about how is going on. So we didn't take any decision yet, so to pull out from this project. But it's clear that it's becoming more and more difficult, and the main problem is not security; it's the problem that we are not really proceeding as we schedule. So we reduce our people for security reasons, but I think that is really we are thinking about the future. The production level is good. It's about 340,000 barrels per day, but we need water injection. If we are not able to have water injection in place, we cannot keep this kind of production level. We have to reduce the production level, and that means that we cannot invest anymore. So the main reason is that we need all the different situation in place correctly to go ahead. We are not excited about our project in Iraq.
John.
Hi, I would stand up, but I don't think I can get out. This is John Rigby from UBS. 3 questions, 2 on gas. The first is, would you, as you approach FID, consider taking any gas or LNG yourselves into a portfolio as part of your sort of growing trading business that you've talked about? I think that's been common practice among the major LNG traders. The second is, Marco, could you talk a little bit about how you would see the shape of the earnings from your business as it sort of matures over the next 2 to 3 years, so the various contributions of the different activities that you are doing? And the third question is just one thing I don't think has been discussed, unless I missed it, is CapEx and the perimeter around CapEx. I think you talked in the release about lower CapEx or targeting lower CapEx for this year. But some of the measures you're talking about seem to me to be either deferrals or complete removals of activities you were envisaging in February. So perhaps if you could talk about where you think the sort of trajectory of CapEx versus your previous plan is. Thanks.
So on the LNG, I think our preferred option at this point is to go and sell the gas, but we always retain the opportunity to preserve some of the gas, particularly the Coral gas. It's 2.5 million tons, so part of that could nicely fit into our portfolio without significantly changing the risk profile. Regarding the shape of our earnings, we don't disclose specific lines, but in a ballpark, as we say, we target to have gas take-or-pay contracts in line with the market, so put that as 0. We do have, as we disclosed in February, some logistics costs as the volumes decline and the shipper pay commitments remain in place. You have some costs associated with that unused capacity, which is a negative. And on the positive side, the way we look at the business is retail, trading, LNG, and B2B. And so those are the high-value segments that Claudio referred to. So as we target to have the contracts at zero by the end of next year, then we'll have a negative on the logistics and positives that overcompensate that on the high-value segments.
CapEx. So CapEx has been what we've done at the very first. You're right. We postponed some projects, but really the work we are doing on CapEx is quite is more sophisticated, more analytical work, because we are restructuring some projects in terms of modularization. We are phasing some projects, so we are practically starting with the early production, creating a cash flow, and then developing. We started doing that with the more, we can say, risky projects like Dubai or like Perla and Kunin 5, where we treat these projects in different packages with the early production. So we are doing the same also in the big oil field that we discover in West Africa. We did this in the block 1506, but we are doing that also in Eni, where we have a 3-phase project with the modularization project, and that is going to have an impact on the final results. So less capex, anticipation of cash flow, and the next phase of capex we are going to do with already existing production to utilize the cost recovery. So we try to avoid any big upfront investment, and that is what we are really doing in a strong detail in our projects. It's clear that we are really attentive to avoid any impact on the production on the 4-year plan. The other point that is always linked to the exploration, big stake, we sell, we cash in, but also we are going to reduce our exposure. So in the new plan, we are considering the farm out of some project that we try to accelerate, but with a lower amount of capex, because we are reducing our stake that at the very beginning is very high. So that are the different situation or reason why we can reduce our capex plan. Downstream and chemicals, absolutely, yes. We made some efficiency in downstream, that is clear. And also in chemicals, we already reduced of 350 million euro in the 4-year plan from chemicals, and I try to do better, but Versailles CEO is fighting a lot.
Any more questions?
Thank you. It's Neil Morton at Investec. I had 2 questions. You announced the reorganisation of Eni sort of remarkably quickly after you took over as CEO. Was this, just out of interest, a Claudio Descalzi decision, or had it been in train for some time? And indeed, will it be, if you like, the final step in Eni's evolution since its IPO in the middle of the 1990s? Just secondly, on Kashagan and the replacement of the 2 pipelines, who will end up footing the bill for that work? Thank you.
So the first point, the organization, it's clear that has been my decision, because I did it. So it's clear that it's not my wife, it's not anybody else. But it's clear that it's something that grow up in the sense that the E&P business is 95% of our revenues and 115% of our EBIT. So it's clear that we have to we needed to transform our company We did also because of the general context. We need a shorter company, more flexible company to increase communication with all the people and to be more flexible to avoid or to overcome all the different hurdles that we have in front of us. And we need a team, very, very close team in a company that is not a group of different companies, but the management team is very close around the company itself. So we change completely. But it's also, we change because we needed to change. We are not more the company of 2005, 2004 with the different business going very well. The situation changed, the gas changes, direct gas is not more there, refineries losing money, chemicals losing money. We had to react, and to react we have to change your culture. To change your culture you have to create a big anomalies, and the anomalies the company, the organization and the management team. For that reason, I took this decision. Kashagan. No, Kashagan, who is... No, I didn't take any decision about that, but I think that who is going to pay the bill? From a contractual point of view, every cost that has been... yes, that we add after the first oil, before the commercial production is at cost of the joint venture. That is clear. We have to understand which kind the perimeter, because we are also spending other money for the development, because we are to continue the development, drilling the well, so that is out. But for the pipe itself, normally from a contractual point of view, is at the expense of the joint venture. We don't have contractually any penalties, so that is. But the penalty itself is really to pay the bill for the pipeline. So that is the answer.
Hi, it's Nitin Sharma from JP Morgan. Looking at the cash flow from operations guidance, maybe you could just throw some light as to how much of this improvement is coming through from the underlying macro assumptions. I see Brent is clearly going quite positively in terms of those assumptions, and that must be helping. So maybe some light on that, and probably Marco, you could throw some light on the declining spot prices and what we've seen in terms of European gas prices. How does that play out for your renegotiations and going forward now that you would not have hub linkage, but prices that will be closer to hub? So if there is a fluctuation, how does that kind of play out in your earnings? Thank you.
So as far as the contribution in terms of cash flow, definitely the strong flow of production in E&P will represent the baseline together with the increase we are projecting by 3%, as we said, in 2015, starting from 2015. Second, the gas and power evolution from a contractual point of view that we said and we outline will give us some additional contribution in terms of recovery of prepaid gas. And third, I would say the shutdown of up to 50% of refinery capacity. At the same time, will free some cash trapped in working capital in terms of oil in place that will be free as we shut down the capacity. And then in this projection we are assuming a recovery as reasonable in cash contribution from Saipem, and even the reduction in losses from the chemical business. These are in good order the main elements of this contribution.
So talking about the hub changes and the impact on the take or pay. Last year we had 100% oil indexation, and so the 30% reduction we've seen in hubs would have resulted directly in a hit to the bottom line, or at least in extra purchasing costs. Now we have 60%, so that's hugely mitigated, and as we target the 100% going forward, we will be floating around the hub. We have had on the sales side some contracts that were not hub linked to support that transition, so that's why you're seeing overall a smoother ride than if we had taken the full hit.
Any other questions?
Thank you. Irene Jimona, Societe Generale. Just if I may go back to the efficiency program, the 1.7 billion euro of 4-year cost savings. You described it comes from simplification and centralization and so on. Can you say how many people are actually involved? So by the end of the 4-year plan, what is the headcount reduction going to be? Because I imagine that is part of it.
There is no head reduction. That is not coming from a reduction of our people. It's coming from other different services, general services, IT, sponsorization, and duplication of stuff that we had and now we are using in a different place. So we are not reducing our people. We are netting, so we are balancing our people in different business, and that means that we are reducing the employment maybe in some area because we are able to free up resources from this exercise. So we are not going to dismiss anybody. We are going to dismiss costs and useless activities.
It's John Rigby again from UBS. One other question I had. I noticed as I was looking through your release that if I look at the dividend you announced and the EPS number you reported, it's effectively 100% payout ratio, I think, for the first half of the year. So, Claudio, I mean, you've now moved to the board level. So could you tell me, was there a pause for thought about that situation and a thought process about what an appropriate level of payout should be, and particularly, I guess, because the nature of the company is also evolving, right? So this is a legacy dividend based around a company that was look very different 3 or 4 years ago to what it will look like in 2 to 3 years. So I just wondered, I know you reiterated a confidence in the dividend, but maybe you could just talk about that in your role as a director of Eni.
Yeah, so I can tell you what I told to my board. And here we have also our president and one of the directors that are in front of me. And what I told to my board and to the chairman, we show the cash flow and the EBIT profile in the next 4 years. It's clear that the payout of so the level of today is not acceptable. But I think that with the program that we have in terms of EBIT result and cash result, so we confirm our guidance. We have a strong number of action, very robust. We reach by the end, in 3 years' time, by the end of the plan, we reach a level that is going back to the acceptable leverage. Average. So we leave something that is about 58%. That is an acceptable level of payout, and we did that in a very analytic way with all the different components at the corporate level. So after these figures, the board accepted. I made a recommendation to go ahead, and in the board of the mid-September. I'm going to ask the approval for this dividend, but I think that it's been done on the basis of the results of the last 2 months of the new program and all the different components that we have in gas and power, in E&P, in R&M, in chemicals, in the restructuring of the cost of the corporates. That has been done not only to pay the dividend, but really to raise the level of the cash flow and the efficiency of the company. So I think that we are quite sure that what we propose is sustainable, not just for this year, but for the long term.
Hi, it's Thomas Adolf from Credit Suisse again. As I look at your E&P portfolio, I mean, your exposure is predominantly to conventional plays, which is a conscious decision you made a number of years ago. You've got a little bit of LNG. You've got gas value chain. How does shale play into your thinking over the medium to longer term as a major oil company?
As a major oil company, play the same role that played just 2, 3, 4, 5, 6, 7 years ago. So it's still out in terms of traditional North American shale gas or shale oil. At the moment, shale gas more than shale oil. What we are continuing is to work in the country where we are. For the unconventional, we are unconventional block in Algeria. We are a conventional block in Pakistan, in Indonesia. So we have some unconventional blocks. We are working on it at the exploration level or production level, like in Pakistan. But we want to do something sustainable, and in terms of activities and in terms of costs. And so where we have facilities, we have already drilling conventional horizons, and we have also in the proximity or underneath we have unconventional, like we have in Algeria and in Pakistan. We can optimize cost, and we can do something that is sustainable. We think that we have found we are so many conventional assets that we prefer to continue our strategy, and the strategy is still to reload, and we are reloading our portfolio on the base of a conventional asset, oil and gas. Now we are more oriented to oil plays in West Africa, and not only in West Africa. Gas play more in the Pacific, but that will be also the future.
There's another one there.
Thank you. It's Mark Bloomfield from Deutsche Bank. 2 questions, please. Firstly, on the restructuring plan in refining and marketing, you've talked about cash break even by the end of 2015. I wonder if you could give us a sense of the kind of upside as we look ahead to 2017, if you're successful in delivering that plan. And the second question, just thinking about your success with exploration in the pre-salt West Africa. I think you've indicated that there'll be some early production potential by 2015, but again, perhaps you can give us a flavour of where you see that going 2016, 2017, and what's baked into your 3% production growth aspiration. Thanks.
So we start with exploration, so we give the opportunity to Luca Bertelli, that is the head of exploration, to say something about what he's doing.
Well, exploration, we had these successes in the pre-salt plays in West Africa, and now the focus is in developing the oil that we discover in Marine 12, Nene Marine. We have already first production coming year end from Nene Marine, and as Claudio said, the Nene Marine will be developed in phased approach. So we will see 2-3 phases of development of Nene Marine. The field still need to be fully appraised, because now we consider that we have 1.2 billion barrels of oil in Nene Marine, but there is still further potential for upside. So this is the focus on development of oil. Gabon, the well is just finished now. It's a nice discovery. Very thick hydrocarbon column is gas and condensate, it's not oil. And we need to appraise, and we will do very soon, as far as when we found a proper rig for appraising and testing the field. So this is the short-term plan for the West Africa pre-salt discoveries.
No, to be clear, we already found the rig. He doesn't know, but we found it. So for refinery and downstream, I think that the contest is we will go to break-even. It's clear that the contest is especially in Europe, is very difficult. I think that is continuing to be difficult because we don't have the right conditions. So the fundamentals in terms of gas price, oil price, facilities, regulation, time to market. So I don't think that the refinery business will be the future for us or for any other European company. So what we have to do is really to reduce our losses, get the break-even, and continue our optimization. But we want to reduce capacity to reduce losses. What we can do is to reduce additional capacity. I think that with the level that we plan now, we can reach the break-even and maybe make some money. But the refinery system in Europe remain really difficult for the reason I told you.
Under pressure.
He said under pressure.
Thank you. It's Chris Coupland from Bank of America. I'll start with the boring question. The restructuring for your efficiency program and the refinery capacity shutdowns. Can you give us an idea for both items whether there are significant upfront one-off costs that you have already budgeted for the next few years as you're fixing both those items? And the second question, back to the topic of dividends. We're looking at roughly 4 billion euros, 13 billion of capex, and you're telling us about a 15 billion operating cash flow number. So it looks to me like that's still not quite enough. Are you effectively arguing we'll get there by 2017? And surrounding that question, maybe you can also comment on buybacks, scrip dividends, other flexibilities you see around shareholder returns. Thank you.
So I answer about the upfront cost for the efficiency program and the refining restructuring, then Massimo will answer about the rest. For the efficiency program, we don't have a lot of upfront costs. We already started, we already got 250 million. I think that we have some costs clearly to optimize, but quite marginal, and will start in 2015, so next year. For the refining, we are shutting down. It's clear that we have cost for abandon, and we have cost for investment, and that we don't start before 2015, second half, and will be more clear about the profile of this cost at the next strategy presentation.
As far as the cash flow, you did the calculation right. So what we talk about this afternoon was an average of 15 billion in 2014 and 15, but we mentioned the 2016-17 level that for the time being remain as we set during last strategy presentation, that would be in the range of 16-17. So it means that reaching this final target means that definitely looking at the, I would say, the real cash flow from operation, less the level of capex, that, by the way, this year is projected to be in the range of 12.5. That could be in the range of 13 billion all along the 4-year plan. We will help us to cover completely the dividend. On top of this, let me remind what Claudio already said about the exploration potential contribution to this result. If we dispose of some interest in some of the recent successes we got in exploration that are far above the level of development that could be sustainable in our organization, and without affecting the 3% production increase, we are keeping on promises. This contribution could help us really, as it would be a contribution from operation, because what we are doing is just to anticipate part of the future contribution. If the price would be the right one, definitely, as we did when we disposed of the interest in China. So that's to the Chinese in Mozambique, sorry. So this is the scheme. So sustainable by definition, without any additional effort by 16-17. If we include this kind of industrial contribution from partial disposition and exploration, it would be sustainable even in 2014 and 15. We thought about the scrip dividend, but the scrip dividend in case would be so as an opportunity for our shareholders, not, I would say, a solution to avoid a cash payment of the dividend. That's our thought on this respect. And third, you mentioned the buyback. You know that buyback, we would like to retain a high degree of freedom in deciding the level of buyback, and so I'm not ready to share any kind of guidance on this respect.
Okay, the last question from the floor, and then we will take a question on the phone.
Good afternoon, gentlemen. Christian Malik from Nomura. Going back to Saipem, just two questions, if I may. First of all, in the options that you consider around a strategic review on Saipem, would that include a placing of the stock into the market and/or a breakup of the business? And secondly, given the pressures facing the services sector, arguably, what sort of timeline would you consider around that strategic review? Would you consider delaying it if the price wasn't attractive enough?
So, I told you that we are at the very beginning of the process. So we don't have any strategy now for the future. It's too early, but it's clear that never break up the business. That is not our role. We are a shareholder. We are going to sell a stake in the future. We are going to understand how we are going to do that, and we want to maximize, I repeat, the value for Eni and the value for Saipem. So for sure we don't want to break up the business. So sorry, can you repeat the last questions?
Do the options that you are considering include a placing of the stock? Thank you.
No, definitely. Claudio said that we are at the very beginning, so we are not ready to share any kind of potential solution for the future.
Okay, I think that we can have a few questions on the phone. So.
Question from Mr. Roberto Letizia from Equita SIM. Mr. Letizia, please.
Yes, good evening. Hope you can hear me well because the audio quality is poor. Again, on Saipem, please. You answered already to some topics, but maybe you can spend a few words about the financing that you're giving to Saipem. So what's going to be the attitude of Eni towards Saipem for its financing in next month during the decision of what could be with the stake? Then a question on the gas and power, clarification on the break-even at EBIT for this year already. Can you repeat us or remind us, please, what are eventually the retroactive impact that you're accounting for this year within the break-even number you're mentioning as? And there's again a final on the gas and power again, but the fact that you're going to be 100% hub link in the future for your gas procurement, is that going to change also the marketing strategy for the future in selling gas, meaning that you won't no longer go to fixed price 2-3 year contracts, but you will floating also on this, changing the policy? Thank you.
So the answer on Saipem is very, very, very short and fast. I repeat what I said before. We're at the very beginning, so I don't want to talk about something that we are still under evaluation. So now we can talk about gas and power. Marco?
Yeah, so you should assume there's about $500 million of retroactive, and this is a combination of various contracts and various things in this year's results. The pricing structure is really driven by the clients, and so I think we're in a point now where we price more of our sales contracts links to hub than the purchasing contracts are. I think the good news with moving to a hub indexation is we have the flexibility now to sell on the hubs themselves. And as you see in our half-year and quarterly results, our sales at the PSV, the Italian hub, becoming finally a real liquid hub, really gives us that extra flexibility that we didn't have before. So overall, you will have a greater percentage of sales priced at the hub as well, but part of that is going to be a result of direct sales at the hub.
Okay, I don't think that there is any more questions. Yes? Okay. Thank you. Thank you very much for your attendance, for your question, and the strategy presentation update is finished. Thanks.